How does a company that rents desks convince the world it's worth more than Ford, Delta Airlines, and Kraft Heinz combined? How does it build a global empire valued at $47 billion, only to have it all evaporate in less than 6 weeks? This isn't just a story of a failed IPO. This is the story of a corporate cult, built on charisma, community, and billions in venture capital cash. This is the story of how WeWork imploded. The year is 2010. In the wake of the financial crisis, a new kind of workforce is emerging. Freelancers, startups, and entrepreneurs are looking for more than just an office. They're looking for a community. Two men saw this shift not just as a business opportunity, but as a global movement. Adam Neumann, a towering, charismatic Israeli entrepreneur, and Miguel McKelvey, a quiet, methodical architect. Their idea was simple but elegantly packaged. They leased office buildings, chopped them up into smaller, beautifully designed spaces, and sublet them on flexible, short-term contracts. But they weren't selling office space. They were selling an experience. They were selling connection. They called it WeWork. From the very beginning, WeWork's language was different. It wasn't a real estate company, it was a physical social network. Its mission wasn't to rent desks, but to elevate the world's consciousness. Free craft beer flowed on tap, weekly parties were mandatory, and a palpable energy filled their locations. It was more than a workspace, it was a lifestyle. This vision was intoxicating. In its first year, WeWork opened 2 locations in New York City. By 2014, it had expanded to 23 locations across the U.S. and London, boasting over 15,000 members. Venture capital firms loved the story. They poured money in, fueling a growth-at-all-costs mentality. The valuation soared from $5 billion in 2014 to $10 billion in 2015, and then $20 billion in 2017. WeWork was officially a unicorn. But behind the explosive growth, the company was burning through cash at an astonishing rate. The model of taking on long-term leases while offering short-term rentals was inherently risky and capital-intensive. To many analysts, it looked like a simple real estate business with a tech company's marketing budget. But Adam Neumann was a master storyteller. He sold a vision so compelling that even the smartest investors in the world wanted to believe. And then, the biggest believer of them all walked in. In 2017, Adam Neumann met Masayoshi Son, the legendary founder of SoftBank and its colossal $100 billion vision fund. Son was famous for his bold, aggressive bets on what he believed were the next world-changing technology companies. After a brief tour of WeWork's headquarters, Son reportedly told Neumann he wasn't being crazy enough. This meeting was the equivalent of pouring gasoline on a bonfire. SoftBank invested a staggering $4.4 billion into WeWork, catapulting its valuation to an eye-watering $20 billion. With SoftBank's war chest behind him, Neumann's ambition exploded. The company went on a global acquisition and expansion spree, opening hundreds of new locations at a breakneck pace. WeWork was now at its absolute peak. It operated in over 100 cities worldwide. It hosted lavish summer camp festivals for thousands of employees, featuring celebrity performances and Neumann preaching his vision like a rock star messiah. The company was no longer just about offices. It expanded into co-living with WeLive, and even opened a private elementary school called WeGrow, led by Neumann's own wife. The spending was biblical. The company bought a $60 million private jet. It invested in a wave pool company and a superfood startup. Neumann himself was borrowing hundreds of millions from the company he controlled to fund a lavish lifestyle and buy up properties, which he would then lease back to WeWork. The lines between the company's finances and Neumann's personal wealth were dangerously blurred. This was the omen. The cult of personality around Adam Neumann had become so powerful that there were no checks on his power. He spoke of becoming the world's first trillionaire, of solving the problem of orphan children, of even becoming president of the world. Inside the WeWork bubble, it all seemed possible. Outside, the financial reality was grim. In 2018 alone, the company lost a staggering $1.9 billion. It was burning through nearly $200 million every single month. The model was unsustainable. The only way to keep the music playing was to tap into an even bigger source of capital: the public markets. In August 2019, WeWork confidently filed its S-1 document, the first step towards its initial public offering. And that is the moment the entire house of cards collapsed. The S-1 filing was the critical failure. It was the moment the public, for the first time, got to look under the hood of this supposed tech messiah. And what they saw was horrifying. The document revealed the company's catastrophic financial losses: $1.9 billion in losses on just $1.8 billion of revenue in the previous year. For every dollar WeWork earned, it was spending $2. But the numbers were only half the story. The filing exposed the bizarre and convoluted corporate governance. It detailed how Neumann held special shares, giving him 20 times the voting power of ordinary stockholders, ensuring his iron grip on the company. It revealed that he had personally trademarked the word "we" and charged his own company nearly $6 million to use it. The market's reaction was brutal and immediate. The document was ridiculed by the financial press and investors. It read less like a prospectus and more like the manifesto of a cult leader. The tech company narrative was shattered overnight. Everyone could now see WeWork for what it was: a deeply unprofitable real estate company with a serious leadership problem. The fallout was a catastrophic implosion. WeWork's planned IPO valuation was slashed from $47 billion, first to $20 billion, then to $10 billion. Investors balked. The company was hemorrhaging cash, and the public markets wanted no part of it. Within weeks, the IPO was officially canceled. The dream was dead. The cult had been exposed. Adam Neumann was forced to step down as CEO, though he was handed a staggering $1.7 billion golden parachute to walk away from the company he had driven into the ground. SoftBank, in a desperate move to save its massive investment, took control of the company. Their $47 billion valuation was now worth less than $8 billion, a write-down of nearly $40 billion. What followed were waves of painful layoffs, with thousands of employees who had bought into the "we generation" mantra losing their jobs. The private jet was sold. The lavish side projects like WeGrow were shut down. The party was well and truly over. WeWork, the company that promised to change the world, was now fighting just to survive. It would eventually go public in 2021 at a valuation of around $9 billion, before ultimately filing for bankruptcy in 2023. The story of WeWork's implosion is a modern business epic, leaving behind powerful lessons. First, charisma is not a business model. Adam Neumann's vision was magnetic. But a compelling narrative cannot defy the laws of finance forever. Without sound economics and a path to profit, it's a ship heading for an iceberg. Second, beware growth at all costs. Fueled by SoftBank's billions, WeWork was pushed to expand faster and bigger no matter the expense. This hyper-growth obsession masked fundamental flaws and encouraged reckless spending. And finally, a powerful culture, when unchecked, can become a liability. The culture Neumann built fostered incredible loyalty, but it also created an echo chamber that shielded its leadership from reality. When the leader is a prophet, no one dares to question the prophecy, even when it's leading everyone off a cliff. The WeWork saga serves as a timeless warning. It's a story about the intoxicating power of a great narrative, the dangers of unchecked ambition, and the harsh, inevitable collision between a beautiful vision and a brutal balance sheet. If you found this case file valuable, please hit the like button and subscribe for more. And now, we want to hear from you. Comment below. What's the craziest example of corporate excess you've ever heard of? We'll see you in the next file.